Hello, this is Matt on the Moon Lambeau channel, and it's a tale as old as time, my friends. Crash the market, buy the bottom. What are people from the world of legacy finance doing right now? Well, they're certainly not panicking about crypto. In fact, take a look at this headline from CoinDesk from earlier today. 3 execs leave JP Morgan this week to join crypto firms. And then there's this article from mainstream media, Washington Post, titled Opinion: Why Crypto Will Rise Again. And it's interesting. I'm going to share with you just a couple of key parts of this because it's interesting what this author had to say, in particular because he basically, in part, described what Ripple is doing in developing the Internet of Value. And don't forget, of course, XRP is at the center of Ripple's entire business model, utilizing XRP as a bridge currency. And he recognizes the actual potential of the world of crypto, which a lot of mainstream media outlets tend to get wrong, or they just want to write dramatic articles about why things are failing, or it's probably, now markets are tanking, it's never going to come back. It's a bunch of garbage. Of course markets come back. But it was just interesting because he kind of hit the nail on the head with this. And it's another reason why I'm so happy that XRP is my largest crypto holding. So, plenty to talk about here. But before going any further, I do want to be clear. I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. As I record this, XRP's at 33 cents, Bitcoin's at 20,587, market cap for the asset class 954 billion, and Bitcoin dominance at 41.17%, so about where it was yesterday. We may see a lot of sideways trading in the coming weeks and potentially months, but even so, you'll see as I go through this, more and more people have come to the conclusion that there's just no shortage of bottom signals. So we might have already seen the worst, and if not, maybe things go a little bit lower. If you compare the potential downside to the potential upside, it's not even close in terms of risk reward. I'll take this bet any day. Here's the Crypto Fear and Greed Index at 18 out of 100, so not surprising, of course, market participants still in extreme fear. So I came across this article from CoinDesk, actually thanks to attorney John Deaton, who shared it. It was the one about the executives leaving JP Morgan to jump into the world of crypto. And attorney Deaton wrote the following. He said, exactly what Charles and I were talking about on Making Money with Charles Payne. So I'll just pause and note he's talking about when he was on national television, was it last week, I guess it was, with Charles Payne, and talked about all sorts of stuff crypto-related, including the SEC versus Ripple case. But anyway, John continues. He says, Charles brought up someone from Citadel leaving for crypto. Now, 3 from JP Morgan. Crash the market, buy near or at the bottom, and then promote crypto as the investment opportunity of a lifetime. And that's why I always say, like, watch what people do. Don't only just listen to what they say, because a lot of times there'll be misdirection when it comes to this. Think about it. How many times over the last several years in particular did we get scary sounding stories from the likes of Goldman Sachs and JP Morgan only to find out that they were jumping into the world of crypto. And then once they're in the world of crypto, if they, unless they're in a mood where they want to buy stuff cheap, then there's positive articles coming from people that work at these firms. And these individuals, they're not stupid. They know that this isn't going to cease to exist, this entire asset class. They're leaving JP Morgan after very long periods of time working there to jump into crypto at a time where it's supposed to be scary, but they're not remotely scared. I don't think it makes sense for the typical investor to be scared anyway, because volatility is a known factor, my friends. But I wanted to share part of this article. It reads as follows. It's been something of a banner week for people departing mega bank JP Morgan to join the cryptocurrency industry, with 3 executives taking the plunge despite a looming crypto winter. So let's pause. Are we not in it? Isn't this already the crypto winter? I thought we were in the crypto winter right now. Anyway, the latest leavers include Eric Regg, a former managing director at JP Morgan with 21 years tenure at the bank. So pause. The world's supposed to be falling apart, right? That's what we're told to believe as crypto prices have been plummeting, right? This guy, whose entire career is in finance, 21 years at JP Morgan, he's like, yeah, okay, well, I'm going to leave JP Morgan and jump into crypto stuff now. That's because they get it. Anyway, Priest continues. He joined the Algorand blockchain project as head of business development and capital markets. Also announcing a new job this week in crypto, Pooja Samuel, formerly a head of ideation and digitization at JP Morgan based in New York City, joins Digital Currency Group, which is CoinDesk's parent company, as head of corporate development. And already this week, CoinDesk reported that former JP Morgan banker Samir Shah had left the bank to become chief operating officer at cryptocurrency-focused investment firm Pantera Capital. Yeah, and Pantera Capital, by the way, founded by Dan Moorhead, the first cryptocurrency hedge fund in the United States ever. And so part of the reason I wanted to highlight this is because I know that there is still a lot of fear going on out there, even though we're mostly trading sideways in recent days, sure. But I'm just trying to highlight people with extensive careers in legacy finance are jumping into crypto. If they're not afraid, tell me why you are. And there's so much opportunity in the future. That's why I want to cover just a couple parts from this Washington Post article. Again, it's an opinion piece titled, "Why Crypto Will Rise Again." The mayhem in the cryptocurrency market has excited the obituary writers. Stocks are down, bonds are down, but Bitcoin, Ethereum, and other digital tokens have plummeted. Taken together, crypto assets have lost more than 2/3 of their value since November. Some $2 trillion in notional wealth has evaporated. But obituaries should note, the bust tells us precisely nothing about crypto's future. History is littered with technologies that crashed but still proved transformative. Take the dot-com mania that peaked in 2000. By 2010, many of the ideas of the bubble era had been productively recycled by the next wave of startups. Companies touting online air tickets or groceries were spectacularly overvalued during the boom and widely ridiculed during the bust. But in the aftermath of the aftermath, e-commerce conquered Main Street. Yes, there's pause. There are so many ideas that it was just too soon. But they did come to fruition. Like, people had the idea for online streaming in the 90s. You couldn't really do it in the 90s, right? But this is why I've made this comparison myself so many times, which is why this really rang true with me, and that's why I wanted to share it with you. And this goes exactly back to why XRP is my largest holding. It's because utility matters and will win the day. As long as XRP is solving real problems for real people, I don't believe it's going to ever go to zero, even though I do believe if this market implodes further, yeah, fine, that the market moves in tandem, so the price of XRP over some period of time could go lower. I'm not pretending like it can't. I've always known that. But it's not going to go to zero if it's solving real problems for real people. I firmly believe that. Piece continues. This boom-bust triumph sequence is the rule, not the exception. The bubble of the 1920s was inflated partly by overblown euphoria about the technology of the time, mass production that built upon Henry Ford's assembly lines and the electrification of factories. Similarly, the bubble of the 1960s rode the euphoria about semiconductors and computers. Both decades ended with a crash. But mass production, integrated circuits, and computers remain among the 20th century's greatest innovations. Yeah, remember when the dot-com boom and bust cycle happened as the crash was occurring? You could find people writing articles, and it's fun to comically bring them up today. Articles with headlines like "The internet was just a fad," crap like that. Some people actually thought that because they weren't particularly insightful. But check out this part, because this is what made me think of Ripple here right at the end of this article. He's basically understanding that the internet of value is coming. This is what Ripple is doing. It's the idea of being able to move money around as seamlessly as you can move information around today. It's coming, my friends. And so he wrote, today's internet renders frictionless the storage, transfer, and sharing of information. Already, we cannot imagine life without it. Tomorrow's crypto and blockchain-enhanced internet may achieve the same for value. Legions of smart coders are working to realize this vision, and none can say what will result. But one thing is for sure, financial markets are no more clairvoyant than the rest of us. Spot on, my friends. And again, that is why XRP is my largest holding, because it's functionally useful. It's not going to cease to be useful in the future. It's just going to be more useful as you have an increasingly tokenized world, an increasingly liquid world. You're going to need to tie that all together to convert from one asset to another, and the technology already exists. It just needs to be more widely adopted, but it freaking works, my friend. And also take a look at this. This comes from Glassnode on Twitter. They wrote, I saw this do on-chain analytics, fantastic firm so far as I'm concerned. Here, let's make this, I can make this full screen. They wrote, despite a weak price action through June, Bitcoin has been withdrawn from exchanges at the most aggressive rate in history. Total exchange outflows in June peak at negative 151,000 Bitcoin a month, with shrimp and whales as main receivers. Now, look, I think it is fair to point out, especially with how crashy markets have been, and how like major firms in the world of crypto have just gone bankrupt and fallen apart, including exchanges. It's reasonable to assume that at least some of this outflow here would have to do with the fact that people are recognizing it's important to take self custody. But my suspicion anyway is that most of this is people that just they're not interested in selling. Because think about it. If they wanted to, why would if they really wanted out, they would have just done it. So either way, they wouldn't have the crypto on an exchange because either they're concerned, so they want to self-custody, or they just went out, in which case they just sell it. Well, if they're taking self-custody, I mean, yeah, you could make an argument that some are doing the smart thing finally and getting off there. Okay, maybe there's a little percent, but I tend to think that if they're not selling, I think the key indicator here is that they're just not the type that's likely to sell here. I think most people that had paper hands have already exited the market, so it's just another indicator here. And take a look at this headline from the Daily Hodl, which is why, again, like there's nothing but reason for optimism moving forward so far as I'm concerned, which doesn't mean it won't be messy around the way, and I'm not pretending like there's no risk. There's risk investing in anything. But look at this headline. Bitcoin flashing multiple bottom signals after massive systemic shock, according to ARK Invest analyst. Bitcoin is flashing multiple bottom symbols, according to Yassine El-Mandra, I'm probably butchering that name, an analyst at ARK Investment Management. Yassine notes Bitcoin is trading below its 200-week moving average, short and long-term cost basis. Yeah, and so a video where I was talking about price and the state of the market literally yesterday, I pointed out multiple people that were pointing out exactly that. And it's not that it's the end-all be-all, no single metric is, but everyone's noticing and recognizes that historically, this is really important. It is a bottom indicator, and it's not the only bottom indicator. Piece continues. It's only the fourth time that's happened in Bitcoin's price history, according to the analyst. And so just to be clear, when you're talking about the 200-week moving average, just the average price of Bitcoin over the last 200 weeks. And it doesn't fall below it, not normally anyway. Now, Yassine also says Bitcoin miners are dealing with pressure. Here's a quote. As stakeholders with the most skin in the game, miner capitulation is a key bottom marker. The Puel multiple, a measurement that compares daily miner revenue to its yearly average, is at a 3-year low. Additionally, the analyst notes that net realized losses in Bitcoin recently reached a 2-year low. And Yassine says the macroeconomic conditions look bearish. Here's a quote. Macro conditions are still weighing heavily on Bitcoin's outlook. Credit default swaps have more than doubled since September, and the yield curve is flattening. Despite signs of a recession, the Fed is still hawkish. If it keeps tightening, risk on assets like Bitcoin could continue to suffer. End quote. So that's in line with what I've been saying here. It doesn't mean that we're going to see necessarily complete catastrophe from here. But yeah, I keep saying, look at what's happening on a macro level. Bitcoin's never encountered this situation before, ever, in the entirety of its existence. So there's a wild card there as a result. But even so, like, there's only so low it's going to go, because there are people like me, and the more, think about this, the more panic sellers actually panic and sell and get out of the market, the greater the percentage of people like me who absolutely will not sell under any circumstance. So again, there can only be so much flushing out of the system, and fine, even if people do capitulate even further because there's some sort of macroeconomic factor that freaks people out, okay, fine, but damn, I won't hate it if that happens. I will purchase fear if I'm sufficiently enticed with low prices. Just saying. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.